Down of the markets, technology, and crypto trends for April 4th, 2026. Let's get started. Tesla's stock is a buy before 2029, driven by a $10 trillion opportunity in the robotaxi market. Despite a 14% drop in deliveries, Tesla's share price ended 2025 in the green, with a market cap over $1 trillion. With the Model Y as the top-selling vehicle worldwide, Tesla is poised to dominate the global robotaxi market, capturing a significant share of the projected $10 trillion market by 2029. Currently, Tesla's stock is trading at $360.59, down 5.42% today, while Nvidia, a key player in AI technology, is up 0.93% at $177.39. As the robotaxi business is expected to represent 90% of Tesla's enterprise value by 2029, investors may want to take a closer look at this emerging opportunity.
The US-Iran war is taking a toll on American businesses and consumers, with rising diesel fuel prices eating into profit margins. Companies like United Airlines and JetBlue are raising prices, with United recently increasing baggage fees. Meanwhile, Amazon has introduced a 3.5% fuel surcharge on sellers. The surge in oil prices is also affecting the stock market, with the S&P 500 currently at 6,582.69, up 0.11% today. As the conflict continues, economists warn of sustained cost pressure across every industry that touches fuel, which is effectively every industry. Consumers can expect higher costs to gradually show up across airfares, groceries, shipping costs, and manufactured goods, with the pain at the pump being just the beginning. The Nvidia stock price is currently at $177.39, up 0.93% today, while Tesla has taken a hit, down 5.42% to $360.59. As the market navigates this uncertainty, one thing is clear: the US-Iran war is having far-reaching consequences for the economy.
Caterpillar Incorporated is on the move, with shares up 19.8% year-to-date and 134% over the past year. Barclays has increased its share price target to $700, while Oppenheimer has raised it to $817. Jim Cramer is bullish on the stock, citing its role in the data center industry. Meanwhile, the market is seeing a surge, with the S&P 500 up 0.11% to 6,582.69, and the Nasdaq up 0.18% to 21,879.18. Nvidia is also on the rise, up 0.93% to $177.39. As we head into the second half of the year, investors are looking for stocks with strong potential. With its increasing price targets and Cramer's endorsement, Caterpillar Incorporated is definitely one to watch.
Salesforce shares are down 22.6% year-to-date and 26% over the past year, but Jim Cramer sees potential in the company's AI business, particularly with its Agentforce offerings. BNP Paribas has raised its share price target to $230, citing the firm's stock buyback plans, which could total $25 billion by the end of the year. Meanwhile, the S&P 500 is up 0.11% to 6,582.69, and the Nasdaq is up 0.18% to 21,879.18. Nvidia, a key player in the AI space, is up 0.93% to $177.39. As the market continues to evolve, investors are looking for opportunities in the tech sector, with Apple trading at $255.92, up 0.11% on the day.
Anthropic is seeing insatiable demand in the private markets, with some investors indicating they have $2 billion ready to deploy. This comes as OpenAI shares are trading at a discount, with a valuation of around $765 billion on the secondary market. Meanwhile, SpaceX is gearing up for an IPO, aiming to raise between $50 billion and $75 billion, which could soak up liquidity and impact the IPO plans of other tech companies. The market is watching closely, with the S&P 500 up 0.11% and the Nasdaq up 0.18%, while Nvidia shares are up 0.93% to $177.39. As the tech landscape continues to shift, one thing is clear: the next few months will be crucial for these industry leaders.
Lucid Group is blaming a seat supplier issue for a 42% drop in sales in the first quarter, with only 3,093 vehicles sold. The company had built around 5,500 vehicles, but deliveries were disrupted due to a quality issue with its second-row seats. Despite this, Lucid is confident it can meet its production goals, reaffirming its guidance of between 25,000 and 27,000 vehicles this year. This news comes as Tesla's stock price has fallen 5.42% to $360.59. Lucid is preparing to start building its first vehicle on a new lower-cost platform aimed at the mass market, with a price point of around $50,000, competing with the likes of Tesla's Model Y and Model 3. The S&P 500 is up 0.11% to 6,582.69, while the Nasdaq has risen 0.18% to 21,879.18.
Bitcoin is on the cusp of a potential rally, driven by a short squeeze that could liquidate $2.5 billion in bearish bets if the cryptocurrency hits $72,000. Currently trading at $67,259.30, a 7.5% surge could crush over-leveraged bears. Meanwhile, the S&P 500 is up 0.11% at $6,582.69, and oil prices remain high due to the ongoing conflict in Iran. A ceasefire or ETF inflows could spark a rapid recovery for Bitcoin, which has consistently failed to hit new highs since March 17th. With $1.5 billion in net inflows over 2 weeks, US-listed Bitcoin ETFs have shown significant interest, and a bull run to $72,000 might happen regardless of the war's duration.
Tether is under pressure to secure a fundraising round at a $500 billion valuation within the next 2 weeks, or it may delay the raise. The company's USDT stablecoin has a market cap of $184 billion, and its valuation target would place it among the world's largest financial firms. Meanwhile, Bitcoin is trading at $67,259.30, up 0.49% today. Tether's CEO has defended the $500 billion valuation, comparing the company's profits to AI platforms. The fundraising round is expected to be around $15 billion to $20 billion, but investors have been resistant due to the high valuation. If successful, Tether would join the ranks of the world's largest financial firms, surpassing all U.S. banks except JP Chase, which has a market capitalization of $794.55 billion.
The S&P 500 is down nearly 6% from its peak, with the Nasdaq Composite falling around 9% after entering correction territory. Despite this, it's crucial to avoid panic selling, as the market can quickly rebound. The S&P 500 has already shown resilience, currently trading at 6,582.69, up 0.11% today. Meanwhile, Nvidia, a key player in the tech industry, is trading at 177.39, up 0.93% today. Staying invested for the long haul is key, as the average S&P 500 bear market has only lasted around 9 months, while bull markets have lasted close to 3 years. With a long-term outlook, investors can ride out market volatility and potentially reap significant rewards, as seen with the S&P 500's total returns of around 625% over the last 2 decades.
Bitcoin's prolonged consolidation below $70,000 may be paving the way for a more significant rally. According to crypto analyst Michael Van de Poppy, the longer it lasts, the heavier the breakout will be. Van de Poppy is eyeing Bitcoin breaking through $71,000, a level the asset hasn't reached since March 26. Currently, Bitcoin is trading at $66,890, down 8.25% over the past 30 days. Meanwhile, the crypto fear and greed index remains in extreme fear territory. Other analysts are more skeptical, with Willy Woo warning of a deeper bear market and Peter Brandt not anticipating a new price high until 2027. As the market waits with bated breath, Bitcoin's price continues to fluctuate, with a current price of $67,259.30, up 0.49%.
Apple is celebrating its 50th birthday, but the company is facing major challenges in the tech industry, particularly with the rise of artificial intelligence. Apple's decision to use Google's Gemini AI as part of a rebooted Siri has raised concerns about user data and whether the search company will use it to bolster its algorithms. With Apple's stock currently trading at $255.92, the company is under pressure to compete with its tech peers, including Amazon and Microsoft, which are investing heavily in AI infrastructure. As the tech landscape continues to evolve, Apple must find a way to balance its commitment to user privacy with the need to innovate and stay ahead of the curve. The company's future success will depend on its ability to navigate this complex landscape and find a way to win in the AI era.
The nomination of Kevin Warsh to lead the Federal Reserve is moving forward, despite a separate criminal probe into the federal. This sets up a potential clash between the two parallel processes. The Senate Banking Committee will hold a hearing on April 16. Meanwhile, the market remains watchful, with the S&P 500 up 0.11% to 6,582.69 and the Nasdaq rising 0.18% to 21,879.18. The Fed's independence is a concern, with Senator Tillis opposing Warsh's confirmation until the probe is resolved. The current Fed chair, Jerome Powell, has denounced the probe as a pretext to pressure him into lowering interest rates. The situation is complex, with the Iran war raising energy costs and the risk of re-accelerating prices. The market will be closely watching the developments, as the outcome could impact interest rates and the overall economy.
Samsung still dominates the North American foldable smartphone market, but rivals are closing in fast. The market expanded 28% year-over-year in 2025, with Samsung capturing 51% of shipments. However, Motorola and Google are gaining ground, with record market shares of 44% and 5%, respectively. Apple's expected entry into the market is also reshaping the landscape, with Counterpoint predicting it could capture 46% of the market share in 2026. Meanwhile, Apple stock is currently trading at $255.92, up 0.11% on the day. The tech sector is seeing significant movement, with Nvidia up 0.93% to $177.39 and Tesla down 5.42% to $360.59. As the foldable market continues to grow, investors will be watching closely to see how the major players adapt and compete. That's your market wrap for today. The market is being pulled in two opposite directions by a pair of powerful forces. On one hand, you have significant geopolitical headwinds. The conflict in Iran is acting as an inflationary tax on the American economy, driving up fuel costs, squeezing corporate margins, and threatening consumer spending. This macro risk is weighing on the broader indexes and keeping assets like Bitcoin in a state of uncertainty. But beneath the surface, a very different story is playing out. The relentless, all-consuming drive into artificial intelligence. We saw it with Tesla, where dismal auto sales are being completely ignored in favor of a future $10 trillion bet on AI-driven robot axis. We saw it with Caterpillar, which is surging not on construction, but on powering the AI data center boom. Even giants like Apple are making historic pivots to compete. So here's your main takeaway. The market is bifurcated. Geopolitical risk is punishing the broad economy, but a massive wave of capital is chasing a select group of companies positioned to win the AI revolution. This is no longer about a rising tide lifting all boats. It's about identifying the indispensable tech platforms that can power through the macro storm. Look for the picks and shovels of the AI gold rush and companies with a clear path to AI dominance. I'll see you at the opening bell. Stay bullish.